Welcome to the Day Trading Academy. Don't forget to like, share, and subscribe.
Hey, what's up guys? Thank you for coming back to the YouTube channel. Thank you for liking, thank you for sharing, thank you for subscribing, thank you for telling your friends, your family, your grandmother, and all about the DTA Day Trading Academy, the only educational YouTube channel in terms of Forex that I think you actually need for you to stay consistently profitable. You're speaking to the one and only Black Clover, the Alpha Son, Darozo Shabalala TK on the mic. And today I'll actually be breaking down market structure, and I'm proud to say, guys, I'm officially a 5-figure trader. I've moved from 4 figures, I'm now a 5-figure trader. Not in rands, but in dollars, baby. In dollars, baby. I'm now a 5-figure trader, and by the end of this year, hopefully that I'll be a 6-figure trader by the end of this year, and by the end of next year, I mean to say I'm hopeful that I'm actually gonna be a 7-figure time trader. But I'm gonna tell you about the process and how I got to actually being a 5-figure trader in terms of USD, because right now my accounts are constantly funded with $10,000, $5,000, $3,000, but we keep growing. The whole point of this is growth. But enough about that and enough said, because we're going to make a whole video about that on how you can actually grow on the markets. Today I actually want to teach you guys about market structure, because I think these are basics that you need, but you're not actually taught, which is why you're actually confusing trading, and which is why your trading is actually hard. To start off, market structure. What is market structure? Market structure, this is actually a definition that I took straight from Google, or when I googled on what market structure is, but I actually give you also my own idea on what market structure is. So market structure is the behavior, condition, and current flow of the market. It highlights support and resistance levels, swing highs, swing lows, a trend, right? Swing highs and swing lows. And then it continues talking about a trend. A trend is simply a constant direction of price movement over time. Market structure can tell you if the market is trending or not. So whenever you come to market structure, most people, they only know something called a trend. They don't know about the other two types of markets. Well, they've heard about them, but they don't actually know how to trade them. But one thing that I want you to know is to remember this: sometimes not trading is actually trading, and trading is not actually trading. You get what I'm saying? You understand what I mean by that? What I actually mean is that there are 3 things that you have to understand whenever you're going to start thinking about being profitable in trading in terms of market structure. You have to understand which we have 3 types of markets. You have a trending market, a ranging market, and a choppy market. If you have a trending market and a ranging market and a choppy market, these are the 3 types of markets that we're actually having: a trending market, a ranging market, which is also called sideways market, and a choppy market. I normally tell people, if it's a choppy market, stay away. We don't trade a choppy market. If it's a choppy market, stay away. If it's a choppy market, we don't actually trade it, because you'll just be giving back your profit towards the market. We don't trade a choppy market. We only trade 2 types of markets, and I'll actually help you, and I'll actually drop a video explaining on how you can actually identify these 2 types of markets. We actually trade these 2 types of markets. Let me correct you. 2 types of markets that we're actually looking towards trading. We're trading a trending market and a ranging market. This is how we're going to be making profits consistently. And for us to actually start being profitable traders, we're going to have to learn to actually apply the right strategies on the right market, on the right condition. So the first thing that I just want to identify, that I actually want to show you guys whenever it comes to trading the markets, you've obviously heard me saying that the strategy that I normally like trading, it involves 3 things. If you guys have been watching our YouTube channel, if you guys have been following and subscribing, you obviously know by now the strategy involves three things that we're actually looking for: the trend, the level, the signal. The level and the signal, but there's more on this. Whenever you join our mentorship program, there's more of this: the trend, the level, the signal. So these 3 things are what I'm always looking for whenever I'm taking. Basically, this is how I trade. The trend, the level, the signal. Whenever I'm analyzing, the first thing that I look for is, what is the market doing? Is it ranging or is it trending? Once I find out what the market is actually trending or it's actually ranging, and then I apply a certain strategy on it. But if the market is actually trending, I then start applying the trend line strategy, the trend strategy, which involves the trend, the level, the signal. Because as you can hear, it says a trend is a simple constant direction of price movement over time. Market structure can tell you if the market is trending or not. So if the market is actually trending, I like to make an example with this. What we do is very simple. We use what we call a trend line. A trend line, guys, is used for you can use a trend line for anything, but I generally use it to identify whether the market is actually trending or the market is actually ranging. That's why it's even called a trend line, because you are following your swing lows and your swing highs whenever you're going to be using a trend line, which will actually tell you what your market is actually doing. So an example that I will give you is this. Looking at this, right? This is just a basic example, a rough sketch, but we're gonna look at actually the actual chart, because this is just a rough sketch, and some of you guys won't actually learn from a rough sketch. You know what I'm saying? So we are actually gonna look at a live chart and actually do practical examples, and I'm also gonna drop, I think, 3 videos on market structure. 3 videos on market structure, just explaining how you can trade the different types of conditions and what is it that is needed for you to be profitable. So the thing with market structure that you have to understand is this: whenever the market is actually trending, if you're going to be having a trending market, we'll be trading the trend, the level, and the signal. This is what we actually apply then. After we found our trend, or we found the trend that the market is in, and we've actually identified it by using a trend line, which is actually very important because it makes marking out our support and resistance areas very easy. Right? Once we found our trend line, what we then use are support and resistance areas, which are actually vertical, horizontal support and resistance areas, because remember, a trend line is simply a diagonal resistance or a diagonal support area. Once we find this, the trend, the level, and the signal, this becomes very simple. What are we looking for then? Once we've identified this, we are looking for the signal. Remember, we are trading after the retracement. After the market broke this high, we're looking for it. We're not going to enter straight from here, but these are also other lessons that we're going to teach on market structure. You don't enter right here when the market is broken, because you're going to be caught off guard and your stops are actually going to be hit. You actually wait for the market to actually retrace. Once the market actually retrace, you then enter after the end of the retrace. On your trend line, and also on your on your support and resistance area, or on your key psychological zone. Plus, on top of that, what else do you look for? You look for your signal, which is a candlestick formation. But there's more on that on the mentorship program. You look for your signal. Once you get your signal, you then start buying. You buy with the market towards up, and then you actually wait for it again to actually retrace on top of a support, in line with the trend, in line with the candlestick pattern that you actually get. You enter the market, you actually move with it. But the deeper context of how we actually do this, we actually have it reserved on our mentorship program. So this is just a basic thing that I'm just going to give you. This is just part 1 of the video that I'm actually going to give you. I think that, this is going to be part 1 of the video that I'm actually going to give you. So looking at this, you already know Wuti, trading. Imagine you're going to try trading a sideways market like this, which is a ranging market. You're going to try trading a ranging market or a sideways market the same way that you're going to be trading a trending market, which is actually very hard. You can't do that. Each market has its own conditions that you guys have to strictly follow if you guys want to make sure that you become profitable. Each market has its own conditions. You don't trade all markets the same way. And before you start trading, there are key things that I want you to know. There are things that I want you to understand when you start trading. Learn to identify your trend and whether the market is ranging or the market is trending. If you can ever look at this, I'm just gonna zoom this in. This market here, whether it's a buy or a sell, we treat it the same way. This market here, whether it's a buy or a sell, we treat it the same way. We won't trade this market the same way that we trade this market. We need to apply a certain strategy whenever we're going to be trading this market, right? If you want to know the strategy that we apply, I'm just joking. I almost said we're going to do that on the next video. Start commenting below. But now I'm actually going to share this with you. So listen, guys. The strategy that we actually apply whenever you're going to be trading a ranging market is actually simple. You're not going to write the trend, you're going to write the range, right? The level, the signal. Same thing, the range, right? Where are we? We only take trades not in between these two zones. We only take trades once the market is hit this zone and once the market is hit this zone. It's that simple. Once the market is actually in this zone, I now know the market is about to sell, right? The market is about to sell. It's ranging. The market is about to sell. It's on a resistance. What's left? The signal. What type of candle formation am I having? Sell. I short the market all the way until this position. Until we actually break a ranging market, because after we break a ranging market, we then have a trending market. That's the structure of the market if you didn't know. After we break a ranging market, we actually have a trending market. After a trending market, we have a ranging market. This is actually the structure of the market. I'm simply just going to make an example for you guys. This is actually the structure of the market. This is actually the structure of the market that I want you guys to see. You can take a screenshot of this. You can take a screenshot of this, right? After the market is broken out, right, of a ranging market, what do we have? It's simple. The market is to retest. Then what? Creates another low, right? Automatically, what are we having? We are having a trend. Automatically. So this needs you to know how to actually apply the two types of strategies whenever we are analyzing, which makes your world of trading very simple. Which makes your world of trading very, 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 very simple. You don't have to overthink or complicate things whenever you're trading. You just have to know the types of market conditions that you are in and the type of strategy that you actually have to apply. This is why we normally tell people document everything that you're doing down, because documenting is actually helpful, because you don't have to store everything that you are doing on your head. Write down the market is actually ranging, the market is doing what. As you can see, the market was actually ranging. What happened after it broke the range? We had a trending market. Then we start applying these criteria on trending market. But then once we are still in a ranging market, we apply the strategy on the ranging market. I hope you guys are understanding what I'm saying. I hope you guys are following. If you like the content, if you guys are getting more informed, don't forget to like, don't forget to share, don't forget to subscribe, man. Come on, at least you guys are learning something. And subscribe. I'll repeat, subscribe. You came this far on the video and you're enjoying, I'm sure. Don't forget to subscribe. So guys, it's that simple. This is part 1 of the market structure. So now I want us to go to the practical side of it. If you want to see the practical side of it, I'm actually going to say it on this. If you want to see the practical side of it, then join me. Let's go. So I want us to look at the practical side of the markets, right? This is actually a very dirty structure. Very dirty, but depending on the time frame that you're going to be using, remember, with positional trading, swing trading, we have intraday trading, and then we have scalpers as well. So if you're going to be using the daily time frame, right, the daily time frame is for swing traders. I don't use the daily because I'm not a swing trader. I'm an intraday trader. I'm a day trader. I love day trading, right? So now if I'm going to have to be day trading, I'm going to have to look at actually the two types of markets that I'm having: trending market and a ranging market. The market is actually trending. What strategy do I have to apply here? This is very simple, because this was an analysis that I was actually doing on gold. Very clean and very simple. Nothing too complicated, nothing too complex. Just applying what I know, and I don't have to add a lot of horizontal lines. Sure, I do see some resistance areas there. I do see another resistance area here. I do see these, but I don't have to add that. I like keeping my chart very clean, because when you become an expert, guys, on your market, I'm a 5-figure trader now, guys. If you become an expert that's in USD, boy. If you become an expert on your market, things become easy. If you become an expert on your market, so you don't have to add a lot of lines. You get what I'm saying? Just keep it simple. Sometimes we don't even analyze. We just open and then we know what the market is doing. So now, looking at the market, what is it that I'm seeing, right? The market just broke out of this uptrend, overriding this trend, telling us specifically that the market is in a downtrend. Market is in a downtrend. It's not ranging, it's not moving sideways. This is not moving sideways, this is moving down. Even though it's correcting, this is moving down, it's not moving sideways. If it was moving sideways, I would say we are ranging, but it's actually correcting. The market actually did what? It came back to this support over here, which was a prior resistance, which got broken and then turned into a support. So the market actually came back to this support. The market is actually pushing up, right? So now what am I expecting now? Since the market is pushing up, I'm expecting the market to actually respect this resistance that we're actually having right here. To respect the resistance that we are having. Once we have a resistance level, then the market definitely it will sell. Nothing else, nothing less. We definitely know what is it that we are actually looking for. So which becomes very simple, guys. So I'm actually aware. Let's zoom this in for the benefit of the doubt. Let's zoom this in because I want you guys to actually see what is it that I'm actually looking for whenever I'm analyzing. Which becomes very, very, very simple. If you've made it this far to this point of the video, know that I'm proud of you, because you're actually taking yourself and your content very serious if you say that you actually want to be a trader. So now, I want you to look at this. What do we have here? We had a minor support. Market tried to push up, but it got broken, came back to retest this level, right? What do we have here? Minor support, right? Market actually retested from this, got engulfed, so the market is actually pushing up, pushing down. So what I'm expecting the market to actually push up, right? But this is when now we start applying something that we call zones. This is when we start applying zones, because the market actually rejected on this level, and these candles are actually rejecting on this level. So on this zone, we're expected to get a candlestick formation on this zone. Once we get a candlestick formation on this zone, we are shorting the market all the way until this point. But then how we are actually going to short the market is based on what we have in our mentorship program, which I can't reveal here, because we don't just enter. There are specific things that we look for before we enter, and the specific time frames that we use when we enter, and there's specific criteria on those time frames that we look for. This is what I meant, guys. Though we are seeing some support and resistance areas, we won't actually mark everything, because we want to keep our chart very, very, very neat. We want to keep our chart very neat. Which becomes very simple. So guys, as you can see, we're actually having a trending market. This is actually a signal that I can give you towards Monday on gold. This is actually a signal that I can give you on Monday on gold. If you've made it this far, you even got yourself a signal. Real. Just imagine. So as the market actually decided to push down, right, which is very simple, it's now retesting. Right, retesting this level. If it does not respect this level, we'll look at another resistance level, which is actually here. We'll look at another resistance level, right, which the market will actually have to respect, because the market is in a downtrend, right? But now, how do we take trades just like that? How do we take trades? Remember when I said to you guys to actually look for the trend, the level, and the signal? This is very simple now. Whenever you want to analyze, whenever you're going to be analyzing, always, apart from the fact that we know what we are doing, right? Apart from that fact, always look for your highest high, your highest low, where the market can actually turn. Like, where are you playing on the market? Like, which areas are you playing on? Now, for you to find actually these areas, right, you actually have to mark out your support and resistance, whether you like it or not. You're actually gonna have to mark out your support and resistance, because you are trying to find these areas, right? You're trying to find these areas where the market is actually trading between, right? Like, where can the market actually move to as the market is actually here? Which is now when we also start incorporating the daily time frame. Once we start incorporating the daily time frame, I'm just gonna remove everything that I'm seeing here. Once we start incorporating the daily time frame, we are then looking for key zones on the daily time frame. Then we filter it out with the 4 hour. We filter it out on the 4 hour. Now I'm giving you deeper content. Now this is a bonus tip, giving you guys deeper content. I'm giving you guys deeper content that we only reveal to our students. So now I want you to see this. You have to look at where your market is and where you are actually going with your market. That's very important. Where are you on the market, and where is the market actually taking you? Let's try analyzing gold. So that you guys can actually see what is it that I mean. In fact, sometimes you don't even have to even use the 4 hour, the daily. You can simply just use the 4 hour, which is what I want us to do, because we are intraday traders. 4 hour towards the 15 minutes time frame. That's all that we are using. We don't go any higher than that, unless you have enough time on your hands. Then if you have enough time on your hands, you can go. If you don't have enough time on your hands, you can go higher than that. But as for us, this is how I trade. The 4 hour going down, right? So now looking at this, I'm gonna do a top-down analysis. This is my high, right? Which becomes very simple. So now we are aware that the market is selling, right? This market was actually trending up. We are actually looking at market structure right here now. The market was actually trending up, but I want us to look at market structure, where the market can actually turn and where the market can actually play, right? So Guys, as you're still watching, I just want to analyze gold very quickly on the 4-hour time frame. I just want to analyze gold very quickly. Just from where the pattern started, this is gonna become very, very simple. It's gonna become very, very simple whenever we are analyzing. Let's look at this zone. Let's look at this zone. Let's create a zone. Let's create a zone. Because remember, we are looking at key points. You have to take yourself seriously when you're in this industry. You take yourself serious. If you don't take yourself serious, no one will take you serious. If you can't even watch an hour video on Forex, how are you expecting to actually be successful? You can't even watch an hour video. Joking. Hour video that's teaching you can't even watch. You want quick stuff. Microwave generation. Always looking for quick stuff. Quick stuff. You want a robot system because you are lazy. Quick stuff. Okay. This is now the trick that I want you guys to start applying. This is the trick. This is the trick of tricks, right? Don't overcomplicate your chart, number one. If you don't see anything, relax. Don't put too much pressure on yourself. Follow the trend. Follow what the market is doing, right? Mark out your support and resistance zone. Each zone is important on its own. Each zone is important. There's no any other zone that's more important than another one. Each zone is important and each zone has its own uniqueness. I've marked out my support and resistance zone. I've drawn my trend. Now, after I've drawn my trend, what is it that I'm looking for? The signal. Where is the market actually leading me to? Where is the market actually going? What am I seeing? So now, you don't only look at where you are coming from. You're not only looking at that, you're looking at what price is currently doing as well. That's very important. I hope you get what I'm saying. You also look at what price is currently doing. Sure, you can draw a trend line here, but that's going to make your chart overcomplicated, which is not what I want. Right? So I want you to see this. The trend, the level, the signal. So now, look at this. What is the market actually doing right now? It's counter trending. Am I safe if I wanna counter trend? Sure, you're safe, but you can counter trend. But you should always know that the market is selling. We're not looking for buys. So best thing that I can do is for me to start looking for sells. Counter trend can work, but this is a 4-hour. Counter trend is best if you're gonna use higher time frames. But on the 4-hour and lower time frames, don't think of counter trending because you're gonna blow your account, because the market can still turn from this, confirming that this could be a double top. Right? And the market can actually turn. And when you thought of counter trending, which is why it's dangerous, right? So looking at this, what is the communication that we're actually having? I want you to see this. What is the signal that we're actually having? The market came from what? An engulfing, pushed the market down, right? Try to engulf into buyers a bit. Market did not buy because we are in a seller's market. The market pushed down, retest, inside bar, broke the inside bar with this candle, broke the inside bar. Market tried to move up a bit, pushed down eventually. What are we having? Inside bar broke above this. Could be entering buys right now, right, on gold. But why would I not enter buys? Because this could actually be a resistance zone where the market can actually sell. But remember what I said, don't trade anything in between. Trade between levels. So what am I going to wait for? I'm going to wait for the market to actually push up all the way until this zone. But then, how am I actually going to confirm that the market is ready to sell? Very simple. I'm giving you guys now exclusive content. How am I going to confirm that the market is actually going to sell. I want you guys to see this. So if the market straight on this zone, remember I said this was a resistance zone, right? It's a dangerous area for us to buy. It's also a dangerous area because we have the golden ratio and the 0.5 zone, so it's in between. So this is actually a dangerous area. So we can also look at this area saying there's a resistance on this area. At the same time, there's the Fibonacci. But if we can manage to also get a rejection based on a candlestick formation, we are selling this market. Stop loss will just be above, right? But we are selling based on, I don't think you're ready for this, on the time frame that we're going to enter on. We're not going to enter on the 4 hour. The 4 hour is just for communication. It's not even the signal, it's the communication. Once the market reaches this level and gives us an engulfing pattern, we can switch towards our lower time frame and then we look for our entries. That's we get a signal. Same content that we are applying. So now this becomes very simple now what I'm actually looking for. This is why sometimes counter trending, if you're going to be an intraday trader, is very dangerous, because you're going to try to counter trend and the market will show your money. Just follow what the market is doing. Just follow what the market is doing and you will make money. So guys, I'll show you actually how to trade. I'm actually going to keep this. I showed you how to actually trade a trending market now. You follow the trend until the trend changes. There is no resistance area or support area that's better than the other. If the market decides to sell, we're going to be selling all the way until the zone. If we were going to be entering on the 4 hour, we will be selling from this zone all the way until here. Because it's intraday trading small moves, but we're making a lot of money out of those moves. A hell of a lot of money. You know what I'm saying? You can even add a trend line here, confirming a diagonal resistance. But I don't want to add too many variables. No, we already have a resistance, which the market turned to a resistance, right? First touch, second touch. If you can turn towards the 15 minutes, you can see what I'm actually talking about, that we had a resistance. This is very clear now. No need for us to debate. It's very clear, right? First touch, second touch, the market can come back for a third touch. Once the market comes back for a third touch, what do we look for? Candlestick formation. Candlestick formation, we are selling. Where are we aiming for? The low. Very, very simple market structure. Very, very simple. So this is a signal on gold for Monday as well. A signal on gold for Monday. Aiming for first touch, second touch. So the market gives us a signal over here. We're pushing down all the way until that zone. So now, I want us to go to GBP, JPY. I want us to go to GBP, JPY. GBP, JPY. Guys, I'm actually giving you my all here. If you're liking these videos, make sure you like, you share, subscribe. And tell your friends and family. So GBP, JPY. This is a pair, it's something else. Same thing that I was looking for on GBP, JPY. Market structure, it's a repetition. But the thing with GJ is GJ consolidates a lot. So you're going to have to learn to actually make money out of intraday trading. You get what I'm saying? Because GJ consolidates a lot. Looking at this example here, this was like something like a consolidation inside of a ranging market. But this I would actually consider as a ranging market because we did not create any new lows. These lows are in the same support. That high is in the same resistance. Pushed down. But then this one is trending. So now looking at GJ, if I have to look at GJ, what is it that I'm seeing on GJ? Very, very simple. Now I'm changing the strategy, right? The market is no longer trending, it's ranging. So change the strategy. What does the strategy remind me? What does the strategy on GJ, guys? Remind me. What does the strategy on GJ? The strategy on GJ is we sell high, we buy low. The market has been rejecting first touch, second, third, fourth, fifth, giving us a candlestick confirmation. We are rejecting, aiming for this low, or aiming for that low as we keep breaking, we keep going lower. Very simple market structure. Very simple market structure. There's nothing more to be done on GJ. That's how easy a ranging market is. There's nothing more to be done. This is how simple market structure is on GG. There's nothing more to be done. But if you go on lower time frames, you're gonna think the market is trending up and we're actually ranging, because this looks like an uptrend on lower time frames. But looking at it from the 4-hour perspective, I know candlestick confirmation, confirming that we are selling, set my TP, enter on the 15, wait until it hits my TP. So guys, this is very simple. This is very simple work. This is very simple work. Just understand your market structure and understand the 3 types of entries, 2 types of entries, not even entries, 2 types of markets that we're actually having. Very simple work. Make sure you like, you share, subscribe. Tell your friends and family that we're on YouTube. This was the one and only, the Alpha's son, King of Gold and GBP JPY. You know the vibes. How we kill it 24/7. How we make money on the markets. 5-figure trader this year. About to be a 6-figure trader before the year ends. And 7-figure trader before next year ends. You know how we kill it? We kill the market 24/7. That's what they know us for. Tell these brokers that we're not done killing them. It's the one and only Black Clover, the one and only. Praise Jesus, son. Hallelujah. You need Jesus to actually succeed. So I'm preaching to you now. Receive Jesus. So now, what I can honestly say is, I'm signing out, guys. Hope you like, you share, you subscribe, you tell your friends all about it. This is the only market structure video that you will ever need when it comes to trading. Give you bombs.